Welcome back. Best Investing video number 4. We're going to get into 4 companies I like moving into 2020 and beyond post-coronavirus. So right off the bat, I'll just go ahead and tell you what their symbols are. We're going to be reviewing OPES, Texas Roadhouse, Velocity Financials, and Zynex. Zynex is a healthcare stock. So I'm going to get into why I like those 4 companies as we get moving forward on this video. But right off the bat, let's talk about OPES. OPES is an acquisition company. They recently just bought out, or they announced the company they're going to take over, and it's BurgerFi. They're merging with BurgerFi. So if you know anything about BurgerFi, it's one of only 2 companies in America that gets A+ rating, within the A rating for quality ground beef. Most of the restaurants you eat in America gets like a D- or an F for ground beef, meaning they use a bunch of chemicals, antibiotics, steroids on the cows, bad stuff. So you already see the trends probably of, people are trying to get healthier, and, you've seen the vegetarian burgers. I think BurgerFi, I think it's a very under-marketed market, or, I see growth potential in that market, so I like it. Let's take a look at Shake Shack. This is the nearest competitor to BurgerFi. Very, very similar. They pretty much do the same thing. I would almost say BurgerFi is better because BurgerFi sells the Beyond Meat, meatless meat, if that's even a thing, but I guess it is. But let's take a look. Shake Shack market cap's $2.21 billion. You go over here, you take a look at OPES. You look at their market cap of $133 million. So $2.21 billion compared to $133.6 million. I've done the math, folks. That's 15x. If these guys are able to successfully take over BurgerFi, which they've already got a letter of an intent, and it's already been announced that they're going to take over BurgerFi. If BurgerFi can then grow to Shake Shack's level, that's a 15xer. So that's why I like it. But here, I want to show you the calculator too. This is what I mentioned on the third video. I've just been spending a lot of time developing this. Let's get into it. Have you done true due diligence? No, I haven't. Not on BurgerFi, so this is going to be a potential trade. But all these other ones, does it have longevity? Does it make profit? Is there growth potential? Yes, yes, yes. So we take it over here. What is the current overall market currently doing? It's bullish. It's extremely bullish. Take a look at its chart for OPES. It's awesome. What's the current trend? Bullish. Trade on fundamentals or hype, both, but mostly hype because it's excitement for BurgerFi, taking over BurgerFi. Relationship to the 50-day moving average, it's above. 50-day is above the 100 and the 200. The 100's above the 200. What industry is the company in? Restaurants. How are the companies within that industry valued? It varies, but like I said earlier, Shake Shack is the closest comparison we have to BurgerFi. Very similar companies. They pretty much do the same thing. What has been the driving force? Acquisition. BurgerFi was announced. People love that. Doesn't have implied volatility rank because it hasn't been on the market for a year. But I don't know the debt levels either, so that's another reason why it's a potential trade and not an investment. What's the RSI tell you? It's overbought. It's in breakout mode, people. The stock is just going through the roof. So yeah, enter in your risk parameters here. This is very important. So I actually have it more so as an investment. So I did not follow because I have a little bit more than $700 on these guys. I have, I believe, $1,700 on them, but it's a stock position. And it's been in breakout mode. We'll get into it. Let's just keep going. So here I got to continue to build this out. This is going to get into how do we want to structure the trade? What type of weapons do we have at our disposal? We're going to take a look at the best implied volatility or the best volatility environments, which, you get that from implied volatility. What's our objective of the trade? Is this going to be a directional or a time decay or, implied volatility drop? I really got to build this out, but there's a lot of strategies out there. But like I said, on the first few videos, I focus mostly on call spreads, put spreads, and I've recently started to do some iron condors to try to capture some time decay and some volatility drop. But yeah, that's going to get built out. But it's still good for the basics. I've entered in all my positions using this calculator. This is a great calculator, even just how it is right now. But I'm going to build it out even more. But here we go. Typical considerations. This is more so for spreads and options. which OPES doesn't even have options. So the only way to do it is you got to buy shares. So I bought 115 shares, may continue to add more. Options not available. Managing the trade, identify which of the 5 trade types it is. So far, it's been a number 5. It's been a beautiful position for me. Just rocket ships up. I'm up 40% on the position. It's been wonderful. Managing the trade, doubling down rules. Consider selling after reaching 50%. So honestly, I view this kind of as an in-betweener. It's a hybrid. It's not a trade, and it's, let's take a look. I think, like I said earlier, it's got 15x potential. So this could be a long-term investment as well with BurgerFi, but going to have to wait till I see those official financial numbers on BurgerFi when the merger is finally announced and, everything gets closed. So exit strategy. What's my exit strategy? I plan on holding through the merger with BurgerFi. Growth potential is there compared to Shake Shack. The reason, it's only one of 2 restaurants with A rating for beef quality, and it's very popular. Go on YouTube, check out what people are saying about BurgerFi. They love it. Pretty sure I've had it too. They put a stamp on the bun of the burger with BurgerFi, and I remember I've had that somewhere. I can't remember exactly where it was, but it was really good. Shake Shack is the closest comparison with 2.1. It's actually $2.21 billion market cap. OPES is listed at 135 million market cap, potential 15x if it reaches Shake Shack level. So yeah, we already went through all that. So yeah, I'm really big on OPES, and just for the sake of this video, let's get into the other 2, which here we have Texas Roadhouse. I'm going to try to keep this quick, but take a look at their financials. What I like about them, you go to their net income. They have consistent net income, and it's, for the most part grown. Yeah, it's grown pretty steadily. The only thing I don't like about Texas Roadhouse is it's got a high cost of goods, but I think that's pretty common for the restaurant industry. But these guys are, if you've ever had Texas Roadhouse, they make the best steaks in the game. They got a lockdown on the market there with the steaks. So, I see a lot of growth potential. I see them going international if they're not already. And just take a look at their chart. I got them at about around $50, I believe. Yeah, so it's I'm just slightly up on them. But yeah, take a look at their chart. I mean, it's $50. It's going to get back up. In due time, it's going to get back up to 71. So, 20 divided by 50, 40%. It's a pretty safe 40% on your money. It's just going to take some time. Like I said, according to the system, most of your money is just going to be parked in moves like this that are pretty obvious. They're just going to take time. Park the money away there, nice and safe, and then we do the quick speculative bets with the options to keep us entertained while we wait on these Texas Roadhouse moves. Moves like that. So let's get on to the next one. Next one here is Velocity Financial. I like these guys. This is a little bit of a speculative bet. Honestly, I wish I wouldn't have put as much as I did. I have over $2,000 on these guys. I wish I would have put more on BurgerFi, but hindsight's 20/20, and the game's not over. That's the greatest thing about owning equity. It's not over till you sell. So take a look at this recent IPO. It IPO'd and it held for a good while until this coronavirus hit. It held at about $14, $13. So, I mean, you take a look at that. That's 3x potential there. Tanked. And I'm down probably $350 on. I believe I have like 2,200 on these guys, so I'm down a pretty good amount, $350, but it's all good. We're going to trade the options. We'll make that 350 back, lower our cost basis on the position, and just wait for it to pop. But yeah, take a quick look at their financials. I'm not going to go too in depth on these guys, but look at the top line. The top line growth has been there. I mean, phenomenal top line growth. You take a look at their net income, pretty good net income growth. It kind of varies a little bit there. You go from 14 to 7. I don't know what's up with that. Maybe they had unusual expense. Yeah, it looks like right here, pre-tax. No, that's pre-tax income. I don't know. There's got to be some reason why it spiked. That's where you got to kind of do your due diligence and dive in. So yeah, it just kind of looks like actually right here, operating expense, 17 million with, I don't know. I'd have to dive in on these guys, but this is kind of a speculative move, kind of a similar deal where I haven't done true due diligence, but they don't have options, so I'm taking a chance with the shares, and I like them. Take a look at the chart. I think once we get out of this coronavirus, these guys will pop right back up. So the next one here is Zynex. This is a game changer for me. I love this company. Take a look at what it's done, its performance. 1 year up 118%, year to date up 205%. Man, I would have liked to get them at the start of the year. But let's take a look at these guys. Yeah, just in rocket mode, and you know, for due cause. You know, there's a reason why. It's for good reason. Take a look at their financials. So yeah, take a look at their financials. Top line growth, we love to see that. Revenue growth, gross income following the same trend. Take a look at their net income. Boom, just going through the roof. And here's, you know, the net income's growing with the top line. That's great to see. EBITDA growing right there with it. Here's what I really like about this company. Take a look at this balance sheet. Take a look at long-term debt. Where is it at? Long-term debt, short-term debt, and current portion long-term debt. Look at that. They have $1.26 million in debt. Nothing. They look at it. Long-term debt, $3.43 million. They have no debt. This company is very under-leveraged and, you know, very safe. You take a look at their sales. So we just said 3.43 in total. The total amount of long-term debt, 3.43 million. They made more in net income last year, so they could pay. They're basically debt-free. Very safe company. They're jumping out of the gym. They have a high PE ratio. If you take a look, where's that at? PE ratio is 81, so pretty steep PE ratio, but it's justified. You saw the numbers. They have no debt, and they're making net income, and their sales are growing. They just had a great earnings. So I love these guys. They're in healthcare, life sciences industry. And they make a lot of medical devices here. Let's just read the description. Zynex engages in the design, manufacture, and marketing of medical devices. It sells electrotherapy medical devices used for pain management and rehabilitation. The company also develops a new blood volume monitor for use in hospitals and surgery centers. It was founded by Thomas Sandgaard in 1996 and is headquartered in Inglewood, Colorado. So there you go. I love Zynex. It's I'm going to keep adding to this position, you know, and it kind of, like right here, this would have been a good ad. It does have its days where it's down. It's pretty volatile, not going to lie. It goes from 22 down to 20. But, you know, you take a look at the overall trend, man, it's been fantastic. Yeah, I was up here at 14, dips down to 9. See, that would have been a great buy at 9. So yeah, just keep your eye out on this Zynex. Plenty of room to grow. Very little debt. This company has a lot of freedom, a lot of life to live. So those are my 4 companies. Thanks for tuning in. I hope everybody has a good Father's Day. Today's Father's Day. Big Sharky here, dropping another high quality, valuable video for my YouTube family. I was going to say followers, but you're not followers. You're my family, baby. Let's go. All right. Thanks for tuning in. Big Sharky logging off.